Good morning, everybody. It's the 4th of March. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare on this non-farm Friday. How are you doing, Steve?
Non-farm, who'd have thought it?
Who
Wow.
cares anymore? Irrelevant.
Yeah, it is. It sort of just messes the markets up and gets forgotten about by Monday.
Yeah, some interesting moves already overnight, particularly in some of the commodity currencies and the dollar index. And obviously, the index is off to a pretty poor start as well. It looks as though the main headline that's sort of causing the anxiety is the Russian shelling of Ukraine's largest nuclear power plant. A fire triggered fresh concerns on Friday, with Russian forces reported as being in control of the facility. Peace talks have made no headway, but some reports that local ceasefires could be agreed with humanitarian corridors to allow the evacuation of civilians. Conditions are relatively calm within central Kiev, but heavy shelling continued in other major cities as Kiev was braced for an attack. So very much, leading the headlines and the markets at the moment. Overall risk sentiment remained very fragile yesterday. There were further concerns over ramifications of the Ukraine conflict, as well as fears that the conflict would potentially intensify. In terms of what's going on the macroeconomic side of things, the ISM manufacturing sector index dipped to a 12-month low in the US yesterday to a reading of 56.5 from a previous reading of 59.9. Anything that dips below the 50 level is a concern. While above that, we are still in expansion territory, but that is the third successive decline and below forecasts of the consensus. So something to keep an eye on. Prices increased at a stronger rate on the month and closed to the fastest, which was close to the fastest rate on record. The hawkish rhetoric from the Fed continues. The Cleveland Fed President Mester stated that it is critically important to get inflation under control and that the Ukraine crisis would put further upward pressure on inflation, which makes it even more important for the Fed to take action. We do have the non-farm payroll number today. The latest US employment report will be released at 1:30. The consensus expectation for an increase in non-farm payrolls to just above 400,000. The data will have to be extremely weak to disrupt the Fed's plans for a 0.25% increase in interest rates later this month. And just finally, on the inflation side of things, we saw Swiss consumer prices increase 0.7% for February. So inflation in Switzerland now is at its highest level in 13 years. So all go on the markets. Aussie and New Zealand just eyeballing on the FX side of things are really going for it. Obviously links to commodities there. What are you seeing, Steve, on the charts on the commodity front, or is there anything else you wanted to sort of start off with this morning?
Yeah, happy to start with commodities.
Let's do it.
Let's do it. Yeah, quite volatile yesterday. We were, I mean, pretty decent range. We got up to close to 115 on WTI crude oil. Hit a low. I mean, it was like a 1 hour move of $9. So pretty decent. What was that? 6%. It dropped in. It must be more than that, surely. From the
Hello, isn't it? Are
high.
you just doing? Oh, you're doing from the high.
Yeah, from the high. 8.5% was the highest price to the lowest price in the space of 6 hours. So pretty strong. That 1 hour candle was quite an amazing thing. However, look what we see if we basically take this out a little bit. We've got a head and shoulders formation here.
Ooh.
Interesting. This is my gun to head. I'm going to bagsy it before Joe steals my trade idea.
Calling
And
tops in oil. Nice.
I might actually go for it now. Here, this is my gun to head. I'm going to sell it here because everyone else is going to look. It's breaking now, so let's do it. I'll put in the stop at around 109 at the moment, but we'll come back to it as long as the price doesn't get up to 109. I'm short here. That's where my stop is. I'll put the target in a little bit later, somewhere down there. So yeah, that's head and shoulders formation, breaking the neckline as we speak. It is Ichimoku cloud, normally what you see with head and shoulders formations, it breaks down, comes back, retests the neckline normally, and then carries on. The measured move target, you would be something like this. There we go. And I'll bring that stop in by the time we get to the gun to head challenge.
Okay.
So, gold as well is sort of like it remains supported with the conflict obviously carrying on in the background to the markets. That's the defining factor at the moment with all the indices. Obviously, with indices and gold, we've got other things to think about. Inflation is like Joe's mentioned in the sort of like news roundup. That's a really key thing. I mean, I think with all the sanctions that have been imposed as well, that creates an even bigger driver of inflation as well globally. So there's probably more reason to cut interest rates. To raise interest rates if that's the way they're going to try and control inflation. Whether it does or not, I'm a bit skeptical. It will eventually, but the immediate sort of like impact will be won't be great because the interest rate rises they're talking about are very, very small. They will have an impact over time, so it will take a long while to get this inflation beast under control. So that lends a positive stance to gold as well. This continues higher. We've been up to the 1975 level. We've pulled back lower. We're moving higher again now during this week. That's the level to target really. Above there, we've got the all-time high at 2075. So we've got almost $100 after we bypass 1975. It feels like it's going that way, and dips should be bought. The trend is higher on the short-term time frames. Higher lows we can see. We've got a level coming in at 1950. We break above there. That should straight away target the 1975 and above there, as I say, 2075. Cryptos, Bitcoin tailing off a little bit from the rally to 45,500. That was where resistance is. We've retraced from there, and we got down to 40,800 and holding just above there at the moment. Again, I think this will be very much driven by the indices as well. They seem to sort of like ebb and flow in the same way at the moment. So if we get further downside on the indice front, which I do expect, then we'd expect Bitcoin to also tail off as well. Let's take a little bit a closer look on the indices. Big turnaround yesterday. We sort of like tried to be a bit clever and sort of like buy FTSE. I think I tried to do yesterday. Was it?
Correct.
Huh?
That's correct. Yeah.
Yeah. So
The
that
standard
didn't work.
when Steve buying indices, that's when you know.
Yeah, you know it gets sold off. So that they're all under a bit of pressure this morning on the short-term time frames. We need to see a break below 70.85 in the FTSE to really sort of like open this up. A little bit of a bearish flag type formation forming. The last hour, obviously, from 8 o'clock, we do tend to get a sort of like a one-way move in that 8 o'clock hourly candle across the indice front. It seems to be a bit of toing and froing, but normally get sort of like quite a strong move, and that tends to be the order of the day. But as you can understand, in recent weeks and months, it's been quite volatile. On the weekly chart, we're seeing. Let me redraw this trend line. Really, that's where we should be seeing it. 1 point, 2 point, 3 points on a weekly chart as well. We're actually toying with that trend line level now, so we should find some support around this 70.85. Below here, though, it really opens up. 68.10 is the big level that we know is supporting FTSE at the moment. So yeah, it looks like it's been a rejection here, a shooting star candle on the weekly chart that has driven the prices lower. Let's take a look at the weekly chart on well, this was like a double top we had in place, which has played out and it's hit the target, and it's still only a 38% retracement. Remember that. So it's just a normal retracement in markets. So at some point we expect to see retracements in sort of like three waves: one wave down, a corrective second wave, and then a third wave lower. So a little bit more to go to sort of like see how this plays out. This is the rally from March 2020, so the end of the pandemic, up to the highs. And I did see a snippet today showing that normally when you get big conflicts, war conflicts, that the markets do tend to rally as soon as they start. So it's we've had a little bit of that over the past week or so, but it's retracing rather rapidly because I think there's a lot of impact on the commodity side of things with this conflict in particular. The Dow has a really strong level at 33,000 psychologically as well. Last week we did get below there. We got down to 32,230, rallied higher, but and we've retested that support level this week, and we're sort of trading around mid-range, 33,500 at the moment. But I think this is what I was looking at before. I think this was just an intraday trade idea I was doing, which worked out pretty nicely, but it did get stopped, unfortunately. So, but we can see that this neckline has basically held again, and further downside is expected. Short-term support coming in at 33,100, and 32,250 is the next level after that. Nasdaq, the bearish engulfing on the 4-hour chart, that was yesterday at 2 o'clock. That put an end to the rally. It didn't get above this neckline that we were looking at again, the head and shoulder, inverse head and shoulders formation, and it's broken down. Basically the shoulder we see as around about 13,700, trading at 13,940 at the moment. So resistance coming in just above the 14,000 level, 14,060. S&P, similar sort of formation and to Nasdaq and Dow. 4,365 would form resistance. Above that, we've got 4,420. Support below, really, if we get a break below 4,281, then further downside should be opened up. 4,110, the key level to watch there. That's about it on the indices front, Joe.
Nicely done. Thank you, Steve. Okay, FX. Right, that's FTSE, so let's get rid of that. And onto the FX market. So starting off with the dollar index, big push to the upside today, a gap higher, in fact, on the open of the dollar index today, and easily surpassing now that 61.8% Fibonacci retracement level, which we expected to act as resistance at 97.72. It did initially, but it's been completely taken out today, and some really positive dollar moves happening at the moment. So I don't see there being really much in the way from this heading up towards the 100 level now, on the dollar index, and we've been maintaining that bullish view for a number of months now, and it looks set to continue playing out. So more upside on the US dollar expected, I guess. That is as a safe haven tactic, really, people buying the dollar as a means of protecting capital. Looking at the watch list on the right hand side here, you can see we've got the Aussies at the top, we've got the New Zealands down here. They are really firmly in the green at the moment, so there is a big push towards these commodity linked assets at the minute. And if you look at some of the mining stocks on London, for instance, they're all trading well up at their highs, so there is continued pressure on the metals prices and commodities prices, and that seems to be helping the Aussie. Looking at Aussie versus CAD, a significant breakout on this yesterday, a break above this downtrend line, which has been really preventing prices from moving higher since July 2021. Really strong move to the upside and backed up with even more gains today. So two really strong pushes higher today, impulsive moves to the upside, and that looks to have really formed quite a large bottom in my mind. So I think we could see higher prices from the Aussie over the coming weeks and months. Taking a look at Aussie Swiss, it's a similar situation. We've broken out through this downtrend. Really impulsive move higher yesterday after being rejected at this downtrend yesterday. Also taking out this horizontal resistance at 66.96. Looking at Aussie yen, that is heading towards previous highs at 85.80. And I wouldn't back against it breaking out from there either. So that continues to look very strong. Looking at Aussie US dollar, That's taken out this horizontal resistance here, a 61.8% fib to complete what looks to be a decent looking double bottom pattern. Bottom there, and then we can start projecting higher prices from here over the short to medium term. Just give a quick indication of where potentially the double bottom measurement leads to, and it's as high as 76.57. So that's the measured move of this double bottom pattern for Aussie versus US dollar. Just see if that marries up with any fib levels. Tend to like that approach as a way of finding some confluence. We've got the 61.8 around 76.10. So in that kind of region is where potentially Aussie US dollar could head to over the medium term. Does have a few barriers to overcome first. First of all, this 38.2% fib, which has just come up at pretty much current levels. We've also got some resistance up here at 75.55. Looking at some of the more popular currencies that like to be traded, Euro, US dollar, big breakout to the downside on the back of the strength that we've seen on the dollar index. That's now pretty much at this 78.6% fib level of this entire move here. So from the lows in 2020 to the highs that we posted in 2021, we've retraced to the 78.6% fib level. So we may see some support form here, some speculative longs, maybe having an attempt at trying to call the bottom on this based on this Fibonacci level. I'm not advocating that or suggesting that's a good strategy, but these levels do tend to have some influence over the market, so there may be some opportunities for some very short-term gains potentially around this level, but clearly the overall trend remains very bearish indeed. Looking at sterling versus the US dollar, that hasn't broken down yet on the back of this strong move from the US dollar. It's still holding in and around this support zone between 132.71 to 132.92. So while it continues to hold around here, there is potential for a little bit of a bounce to take shape. The key support for me is down at 131.60. If that gets taken out, then we can start looking for a move down towards this 50% fib level at 128.46. So plenty going on in the FX space. Obviously, we've got non-farm payrolls later today, and they can be, affected quite in quite a volatile way, especially anything linked to the US dollar. And obviously, we need to see if this dollar move can sustain and it can hold on to this breakout, this gap higher that we've seen earlier, or overnight, should we say. So that's it from FX. Steve's already done his gun to the head trade. Steve, just want to quickly run us through that again, just and what you're thinking on that.
Yeah, sure. I think after seeing the
Can't change your mind.
no, can't change my mind, mate. Done it. After seeing sort of like how volatile volatile this could be with this candle we had yesterday. We've got this head and shoulders formation forming. We're trading around the neckline. Looked like it was going to break it, so I got short dived in there straight away, a bit early because it hasn't quite broken it yet. But measured move target for that, if it does break it, is 96.13. So I'm going to place my stop above the last 4-hour candle, basically at 108.66. Got short at 105.66. It's slightly offside at the moment. Targeting 96.66. I think we can sort of like have quite an aggressive move, volatile moves over the sort of like with from anything. You know, that, I mean, that would indicate maybe some sort of discussions taking place to scale back this this conflict that's going on. But there's nothing indicated on the headlines to show that at the moment. But yeah, I'm just going by the price action and the numbers really.
Okay, cool. So just a quick roundup on yesterday, actually. So I went short of cable, made 39 ticks on 0.89R. Steve, as you mentioned earlier, you've stopped out on the FTSE. So just a quick update on yesterday. I'm going to take a look at FTSE 100. It obviously has links to what you're doing on the oil side of things because it is so heavily dominated by some of these large oil players. This is my FTSE chart. Looks like we've seen a breakout of a wedge to the downside, also taking out this horizontal support at 72.27. Really impulsive move lower today. Maybe even a head and shoulders I can see in there. This being the left shoulder, this being the head, and a really sort of tight looking right shoulder here. So looking at this on the intraday candles, I've given up a bit by talking too much. I should have done what Steve did and just got on it earlier, but I'm going to sell it now at 70.82. Stop loss at 72.16. So I'm going
No,
to
be
have to
aggressive
look.
with it, Joe. Be aggressive with it.
All right.
Aggressive stop.
Uh,
I'm the little devil on your left
All right, I'm
shoulder.
just going to keep it. Hope it keeps going. I've got this level at 68.51, I think, because it's a 38.2% of the larger time frame. So let's just have a look at the. Yeah, so this is the daily. The 38.2 is at 68.53. So that's where I think prices are likely to get to before we see some sort of stalling. So that's my trade of the day. Just
Nice
to
one.
confirm, that stop loss on the FTSE is at 71.51.
Nice one.
Okay, so data-wise today, as we have referenced a few times, we've got the non-farm payroll numbers at 1:30 UK time. Um, Not sure how much influence this is going to have overall on things. It may, if it's an extremely weak number, put some pressure on the Federal Reserve to increase rates by more or not at all, given what that data will be. But I think, more than likely we're going to continue focusing on Ukraine. Obviously, we've got 2 days ahead of us for the weekend that there'll be no market action unless you're trading cryptocurrencies. So do be aware of that gap risk on the Sunday night open at 10 o'clock UK time, because in this current volatility, that could be a big factor and lead to significant losses if you're caught on the wrong side. So just be careful. Anything
Excellent.
to add, Steve?
No, nothing to add, mate. Be
Lovely. All
careful
right.
out there. Non-farm Friday.
Yeah.
Keep your hands in your pockets.
Yes. Cool. All right. Well, have a good weekend, everybody. We'll be back on Monday.
Cheers.
Bye.